Hello, everyone. My name is Guillaume Prou. I'm the VP of Technology here at Beta Virtual Assistants. So I'm here today for the our Tuesday Tax Tips Facebook Live. So let me just make sure the sound is good. 1 second. All right. So is the sound all right? Yeah. Seems good. All right. So sorry about that. So basically, we talk on Tuesday and Thursday. We talk about different topics related to crypto taxes and other related subject. So today, I wanted to discuss the different kinds of income. And so what that means is that first thing is we have something called we have basically two types of income we might have. What is kind of considered capital gains, and we have other kind of incomes. So first thing to remember is that every time you transfer cryptocurrency from one place to another, this is usually more called the transfer, and then there's a withdrawal from one place and then deposit to another place. That's not considered income or anything. It's just a transfer. However, when you're converting from one coin to another, that's more like a trade, and then that triggers a taxable event. So if you transfer from one place to another, that's fine. But if you're converting from one asset type to another, that's a trade, and that will trigger a event. So a common misconception is that unless you sell something and convert it back to fiat or to your local currency, and then you withdraw that and transfer back to your bank account, that then you owe taxes on this. But that's incorrect. It's You don't have to get the money back in your bank account. As soon as you're trading or doing any kind of conversion, that's a taxable event. So regarding trade also, that's what will trigger normally what's called a capital gain is because you're buying something at some point, and then later on you're selling it. Again, selling might mean you're just converting into something else, but basically you buy something and then you sell it for a different value later, hopefully for more, so you would have capital gain. Or if you're of course selling for less, that would be a capital loss. Again, in this case, of course, now there's a lot of questioning and issues about what is cryptocurrency, and is that an asset? Is that a security? Is that a token? And so there might be changes over time about what's considered exactly a capital gain. But in general, in most places, it's really buying an asset and selling it later. So that, of course, it depends where you are, but in some cases, they have special taxation rules for capital gains. Either it has different tax rate, or sometimes in some places it's might be added to your income, but like in Canada, but only for 50% of it is added to your income. Then again, another thing with capital gain is they might be different kinds. So for example, it could be short term if it's less than a year, or long term if it's more than a year. So what's like we mentioned before, what's important though is that you need to know how much it costs, so that you only pay the difference between what you sell and what you paid for. So one issue often is, like I said earlier, transfer. That's not a taxable event per se, but if you're buying crypto, moving it somewhere else, or transferring it somewhere else, when you sell it eventually, you need to know how much it cost you initially. So if you lost track of this, or your software or your Excel sheet lost that, and sometimes gets complicated, then you might end up paying taxes on the full amount, even though let's say you paid $50 and sold it for $60, then you only made $10. So then you don't want to pay taxes on this full amount of $60. So basically you need the cost basis, and you need what you paid for, and then what you sold for, and then the difference is your capital gain or loss. Or in some cases, what we would call like profit normally, because you're hopefully may add a profit on selling your assets. So that's mostly about that first class of how you basically make money with crypto. The second type, which has a lot of different variation, is what is more considered like income or general income of some sort. So what happens with this is that anytime you maybe got a gift for some reason from an exchange or even another person, if you have a gift, if you got some reward on your for doing certain activities, if you got some bonuses for referring people, or if you also got some airdrop, so you got like some airdrop of crypto. Then there's another kind, more like if you're a bit like if you're saving, get some savings, so and then they get something for you for holding those assets. So it could be staking rewards, could be kind of interest income, or other similar. So all of this is considered income, and in most places it just gets added to your other incomes on your tax return. There's another case where it's like mining income. So this is a little bit different in the sense that in some cases it's like more likely to be considered like a business income. So that means that it could be like either treated differently, or it means that it's more like self-employed income in some jurisdictions. So basically, it might have a different tax rate again. Of course, all the other income I mentioned earlier, there's also an opportunity for you. Sometimes in some places, people they do invest in crypto as a business. So then anything that's in this business entity would be kind of business income, of course. So that's a bit a separate topic, but yeah, that's an option for some people, either to get better tax rate, or in some cases is that they want to be able to deduct some of the expenses for doing mining and things like that. So I'll talk about expense probably next time on Thursday. So, but yeah, to be able to deduct expenses. Otherwise, like I said, capital gain is really just the difference between what you paid and what you sold for. And then again, I'll talk about that later next time. But like fees, when you're buying and selling, then you might be able to deduct the fees. But in most cases, you won't be able to deduct all the other kinds of expense. So that's why there's a good reason sometimes for people to set up a business entity. Another thing that happens is if you have a loan or something, or really you send money somewhere and then later on you get some of it back. So depending the way it's set up, it might be that you're investing some money for getting income later on in some kind of interest or staking possibility. And so it's not necessarily that you're buying an income generating NFT or certificate or something else. Or it's just that some other people are investing for you and they're giving you back some of the rewards or income that they make, and you get a share of the income. So what we do sometimes, it's more like the initial amount you invest when you get it back, it's more considered like a return of capital. So you're getting back your initial investment, and then what comes up after this then might be considered more like other kind of income, like again staking or interest or something like that. And then unless there's a way for you to sell what you this income generating asset later on, then that would be a capital gain of selling the asset. But the amount you make basically is normally considered income, unless in some cases we first use the return of capital for the initial amount. One thing also to note is that anything you get, most likely all incomes you get that year, it's taxable for that year. Again, the capital gain is different because it's only when you sell the asset. So that means you can hold it for more than 1 year or something. So you might buy this year and sell in 3 years from now. So you won't owe taxes on something until you sell it, of course. But then most other kind of income, it will be taxable for that specific year right away as soon as you get this amount, because that's something you didn't have before that now you got in your wallet or whatever. What else? There's possibly margin derivative in future, and that's again more or less like profit. Profit, which might likely be considered more like capital gain, unless there's some. But then it really depends in this case how it's being used and stuff. So sometimes we have to look at what's really the setup and how you're using those instruments. But yeah, that's not as common, of course. But some people they do that. And then if you're borrowing or something, or taking a loan, again, it might affect more the fee side or the expenses, but not necessarily the income per se. One other thing you might want, again, is that when you get something for free, airdrop, things like that, then most likely the cost basis will be zero. So that means that you will pay you would owe taxes on the full amount of the value when you got that what was the value that day. In some cases, you can if it's not publicly traded or publicly visible, then we have to use what you paid for when you buy certain types of asset, like an NFT or something. So basically, sometimes the software will try to get the value on the market, but if not, usually what you paid for is really considered what is your cost basis. So it doesn't matter what it was worth on the public market. The value is more useful for the value is more useful when you want to check what's your current value right now. And again, one reason for doing that might be that you're trying to decide if you have unrealized gain or loss, if you're gonna maybe sell or hold short term or long term. So then you might care more about the current value, but otherwise, when you get the income, will be what the value is at that time and when it gets taxed. So that's pretty much mostly the income side of it, and I'll talk more about the expenses and the fees and stuff next time. So feel free to let us know if you have any question about this. And again, we have a link if you want to watch our latest webinar. And then if you want to find out more about our different services, could be the courses or the do it yourself or done for you. And As you know, we're here on Tuesday and Thursday for crypto taxes and crypto advice and ideas and explanations. And then normally on Saturday, it's the more like the strategy where we discuss different kinds of investments or opportunity, mostly in the crypto world and related. So we're happy to have you. Thank you for watching today, and we'll see you next time. Have a good evening. Bye.